Well, for the past two modules, we've been talking about insurance. So, what I like to do in this lecture is really give you some of my summary thoughts about the various insurance products that we have discussed. And my opinion, just some food for thought as we kind of go through these. So, let's take a look, kind of like we've done in past lectures. We'll go by topic. So, let's start with our first one, kind of the granddaddy of all insurance, life insurance. And let's approach each one of these with do I need it or do I need it? And then some thoughts and discussions about that. So life insurance, do I need it or do I not need it? Well, the answer is maybe. There'd be a little unclear on that, but really what you have to look at is the fundamental purpose of life insurance. It is not to make the beneficiary win the lottery. Sometimes you joke around with your spouse if you have life insurance, like, oh, you're going to be rich and living on easy street if I die. Really, the purpose of insurance is to replace your income. Unfortunately, human beings, if you think about it in very kind of cold and calculating um, math, have a value, and that value is based off of the income stream in many cases. That's very easy to calculate the income stream that they provide to others that may depend upon them for that income stream. So let's say you have two domestic partners living together, man, wife, or whatever that relationship may be, and they have committed to certain financial obligations together as they go through life, assuming that there's going to be two incomes. Maybe each one makes $50,000 a year, and your household income is 100, and you're making plans on that income, kind of going forward. If someone were to die, that income could be halved. Now, yes, another spouse could go on and remarry, or you may find another partner, and that income could be supplanted with a new individual. But that's not a very good way to plan, knowing that, oh, geez, I better hurry up and get married because my spouse just died and I really need the income. Now, 150 years ago, that was the way things worked. Especially if you were female and the husband died, you had to go out and get remarried relatively quickly. Uh, but that's just the way it was. But we're not operating back in 1850, so this is a different time. And that is the purpose of life insurance. It is really as income replacement for the person that has dependence upon them. If you have no dependents, you do not need life insurance. Let's say you're single and you have no kids. You have, um, no one depending on that income. It's really not necessary to have life insurance. Now, what you may want to consider, I guess the one caveat would be final burial expenses. There are policies out there. They actually used to call them burial policies, but they don't call them that anymore because no one wants to really buy that anymore. It's kind of depressing. But you can buy a small term life insurance policy that would, in essence, cover, the cost of a funeral if that money was not in a savings account that you would have someone as a beneficiary on. So if you didn't have the cash money to bury you, you could have a small policy to take care of that. But you might think, well, I'm single. I have credit card debt of $5,000. I have my car loan. Um, I should have my life insurance to cover that. Well, that is a choice up to you. If you do die and no one else is on those loans with you, the insurance, the credit card company will write off that loss. But again, you're not really worried about your credit report anymore at that point. You are no longer with us. If you have a car that you have a car loan on, and again, as you have known, as we've had these lectures, I worked at a bank, and this happened frequently that someone would die when they have a loan. The car could just simply be surrendered back to the bank, and that was it. Now, the one caveat I'll give you as well. So Being single and no dependents, here's a couple of things to think about. One was the burial expenses. If you don't have that $5,000 or $5 to $10,000 to bury you, and you do not want your loved ones burdened with that, you might want to consider a small term policy. If you are on any, if the loans that you have been co-signed by others, you may want to consider life insurance and having that life insurance beneficiary be the person that co-signed for you. What would that mean? What does that typically look like? Let's say if you're a younger individual and you had a parent or a grandparent co-sign on an automobile loan for you. If you passed away, your parent or grandparent, the co-signer, is just as liable to pay that loan off as you were. So the bank will look to that other individual to pay the loan. And same credit rules apply. I mean, if you surrender the vehicle, that is considered a repossession with if you do have a co-signer on there, it is considered a repossession. So really they have to take on that loan just as you are paying that loan. Both individuals are equally responsible for repayment on that. So in that case, it may be a wise move, a good thing for your co-signer to know that, hey, I have a small policy out there. Let's say it's a car. I've got a policy of $35,000. If something should happen to me, it's made payable to you. You could pay off the car loan, get rid of the car, do whatever you want, and maybe there's enough in there for final burial expenses as well. So those are a couple of things to think about with life insurance. If you have no dependents. If you have dependents, the story is much clearer. You need life insurance. Unless you're independently wealthy or you have, some other, massive financial needs out there or resources, you're going to need life insurance. Your income is, if it's being calculated in and again, the typical family unit, you have two parents working, and that those incomes are coming together to pay mortgage, to pay utilities, to pay car, payments, to pay tuition, etc. Absolutely, absolutely, life insurance is needed. There's a great little formula in the book to kind of show you how much life insurance you may want to consider if you're looking at income replacement. As you get older, a lot of these things go away as far as the need for life insurance. Your house may be paid off. You may be living on retirement income. You may not have the need, and most people do not have the need for life insurance. Your children are grown. You don't need to worry about that kind of coverage. So, but especially, if you have dependents that are counting on your income, life insurance is definitely recommended. As you've probably got a flavor of in the past couple of modules, I am a big fan of term insurance. Cheapest way to get the most coverage. All other products out there are usually some sort of variant of term insurance, whether it's whole life or universal life. They have other bells and whistles basically attached to something underneath. The fundamental calculations will always be based on actuarial tables. That's basically what the insurance company believes how long you're going to live and what kind of risk profile that you are. And they're pretty darn accurate because they make their livelihood on the accuracy of these actuarial tables. That's all driven through really any insurance product. It's all kind of the same. So if you're looking at just fundamental coverage for the cheapest price possible, it's term. Term is the best thing to do. And full disclosure, that's what I have. I have 3 separate term policies. I have added those term policies really to cover my basic income. And then, as some other family situations changed where my wife could no longer work, I kicked it up another notch with an extra policy. So, food for thought on that. Before we leave life insurance, I will talk a couple more things about that. Many employers will offer a life insurance policy um, while you are working. That life insurance policy may or may not be portable. And what that means is After you leave your company, you most likely cannot take that policy with you. So what does that mean? It means that I wouldn't count on it. I would not count on life insurance provided by your employer as being the key component of your overall insurance picture. Maybe do consider it. It's usually very cheap. It usually requires no evidence of insurability for certain dollar amounts, and that can be critical. You start a new employer. Let's say you have some health issues. Maybe you're diabetic, maybe you smoke, I don't know, but you might have some health issues. Usually you can get the one time or maybe even two times your annual salary without providing any proof of insurability. What does proof of insurability mean? It means going to the doctor or they send you to their doctor to get your blood drawn to see if you have high cholesterol, what's your BMI, are you a smoker, they're checking for nicotine. Um, and if you have maybe some interesting health issues, you may be denied for insurance because the insurance companies, they don't have to take you on if they deem that if in their eyes they deem you as too much of a risk. So having the ability, if you have a pre-existing condition, not being required to provide evidence of insurability can be very good for you. So take a look at what your employers have. It's definitely something to put icing on the cake, if you will. If you maybe you're a little bit light in your overall insurance picture, that might be a little bit extra comfort for you in reaching the total dollar amounts that you might need for coverage. But again, if you lose your job, you may not be able to, in most cases, cannot take that life insurance with you, even if you're willing to pay for it on your own, which means now you're going to a new job, which may or may not offer life insurance. And if you decide to buy life insurance out in the market, well, the market in most cases, if you're looking at larger policies, which most of us will be looking at hundreds of thousands of dollars in coverage, they are going to require evidence of insurability. So just keep that in mind. That it's a good thing to have if your employer offers it, but don't make it the centerpiece of your life insurance policy, life insurance picture. Here's another thing to think about too, and I know I'm going on about this term insurance, but I know it's really to me it's very important. Right now, if you look at yourself and go, I'm in good health, you know, I have no health problems right now. This is the time to get insurance. You do not want to wait. There's a couple things that trigger higher premiums. Any health issues are going to trigger higher premiums. If you do smoke, if you are overweight, um, or your BMI doesn't quite match whatever the insurance company thinks. If you can get insurance, they're gonna charge you more for it. And it's based on again on those actuarial tables. It's not to pick on you individually, but when they look at again, I'll pick on smoking. If they look at a population of smokers, they know that well, they're not going to live as long. So they have to adjust their incoming premiums, how much money they're collecting, because they know they're going to be paying out more and they have to make a spread. They have to make some money on all of this. So they don't want more going out than what's coming in. So, yes, you're going to have higher premiums. But if you're in good health now, this is the time to get that term insurance. Get that level term insurance. As you get older as well, the policies, the numbers go up. So, there's those magic ages of 40 and 50. You jump up in those tables, in those tables, those premium tables that they have on. You can kind of see. You draw your line across. Okay, if I'm 32, I pay only $15 a month. Oh, if I'm 55, I'm paying $110 a month. I mean, it can be that dramatic. So get the term insurance. My recommendation would be look at that term insurance early in your life. Lock in a dollar amount that you feel would be generally that income replacement that you're going to need. I think the tables provided in the supplemental reading are pretty good and get you a nice solid number of what you're going to need. Maybe you supplement that with some work insurance, but if you didn't have it, it's not going to destroy your family. And by locking in, let's say if you decided to get a term policy that was 20 years and it was a level premium, um, if you do become sick, if something does happen, they can't do anything. The insurance company cannot take your insurance away from you. That's just the way it is. But once you have that event happen, then trying to get insurance after that event, I'll pick on a horrible one, cancer. So if you were to be diagnosed with certain types of cancer, pretty much after that point you may be uninsurable. But if you received your insurance before that diagnosis of cancer, years before, and you have a 20-year policy, and unfortunately something happens 5, 6 years into the policy, you're diagnosed with melanoma or some sort of, cancer. Um, you know, you have that insurance. You may not be able to get any more insurance for the rest of your life insurance, but you got that insurance then and there. So get it while you're healthy, and if you can, get it while you're younger. If you are thinking about family planning and having children and having a greater number of dependents, uh, think about it. That's when I got my first major term and policy, really my base. My base policy I got before the birth of our first child. So once we knew we were having a kid, I had a wonderful life insurance policy with my employer, but I didn't want to count on that. So I went out and purchased my own term policy on my own, nothing to do with employers. It is mine. Actually, I went 25 years out, level term, level premium, and that's always served as my base. And then when we had a second child, I boosted that up just a little bit as well. So, and always in the back of my mind, knowing I'm healthy now, but what if something happened and all of a sudden, wham, I got diagnosed with diabetes, and then I can't get insurance. So there's my thoughts on term life insurance. Yes, you may need it. No, you may not, but please look at your own personal life situation. All right, our next one, disability insurance. Disability will destroy you financially very, very, very quickly. So, my recommendation for this one is that you do look at disability insurance and you do look at that through your employer. Most employers do offer some very competitive disability. Usually, you cannot beat what your employer can offer you um, with disability, but it doesn't hurt to compare, to go out and shop for disability insurance as well. The disability insurance is, again, a form of income replacement. So, if you are disabled and you can no longer work, and let's say you have health insurance, well, that's fine. That might take care of your medical, doctor visits, all of that. But what's going to help make that mortgage payment? You can't work anymore. What's going to help, make the car payment or all of these other things that are no longer happening because you cannot work your job anymore? And that, when you look at a lot of bankruptcies, when you hear about health-related bankruptcies, yes, the healthcare costs can be very crushing, for the actual medical care, but that's not the main reason most people declare bankruptcy. It's the inability to work and receiving that paycheck. That's what crushes individuals. So I would definitely look at disability insurance through your employer. Many employers, and you want to look at making sure you're covered both with short-term disability and long-term disability. And again, the long-term is the one that's the most devastating. If you have a long-term disability, if you are disabled for the rest of your life, is that something that you have covered? And maybe a little extra out of your paycheck, if you need to get long-term disability, but again, something to look at through your employer. Also, employers may offer certain levels. Maybe they give you long-term disability at 60% of your pay, but you can buy up additional dollar amounts. In most cases, I would recommend buying up additional dollar amounts. At least I would think in most cases, examining something if you were given the option to buy up to 70, 75% of your income. That would hopefully feel pretty, there might still be some financial squeeze for your family, but it hopefully would not be a complete squeeze. And I should say your family, even if you're single. I mean, it's for you personally that you would still be able to make your rent and pay your cable bill and all of this stuff. So take a look at that. Usually the 50 to 60% that employers will provide, um, it will help, but it can still be very devastating, and you may have to dramatically alter your the quality of life that you currently have. So to try to keep things as much as possible, again, maybe buying up to 70, 75% or even more on the disability income, disability insurance. The very dramatic statistic is that most people who do become disabled uh, do so before 45. So it's not something we all plan, but it could be the result of an illness or an injury. So, and it can happen young, young in your career. So if that happened to you at 40 or 45, you were still planning for working for another 20 or plus years. And now that's not there. So disability insurance can really come in and save the day. All right, auto. I won't spend too much time talking about auto insurance. I think it's the insurance that we're most familiar with and we're required by law to have, at least with the liability insurance. Collision is the one that protects kind of our car and gets our replacement vehicle. If that's really up to you. I have had in the past, where you're driving the clunker vehicle that's only worth a couple of $1,000s, where I've just had the liability insurance. That was all I needed. There's no reason to get collision because if my car was in an accident, it's going to be totaled anyway, and it's only a couple $1,000s. I'd have to go out and get a new one. So it really wouldn't hurt me that bad. But of course, for any newer vehicle, with the cost of vehicles nowadays, most of us are getting both, the collision and the comprehensive or the liability part. So, whether you're getting comprehensive or just the liability is kind of up to your own individual situations. But auto insurance is mandated by state law, so we've already got that, and I think we're pretty familiar with insurance. Home insurance, if you got a home, again, this is kind of a no-brainer. If you got a home, you're having homeowners insurance. Your home burns down, your home gets flooded, you want to make sure you're covered. With flood insurance, do be careful about that. If you do suspect that you are if you're at a flood in a floodplain, your mortgage lender will require you to get flood insurance. If you are near a floodplain, you may want to get it anyway. So it's a good thing to know, but do make sure especially the flood and water damage parts of a homeowner's insurance policy can have some very unusual triggers. Make sure that you are covered as best as possible, especially for how the water enters the home. If the water enters the home through the basement drain, are you covered? So luckily for us, that has happened a few times and we have been covered. So, but if we didn't have that specific rider on our insurance policy, we may not have been covered for how the water enters the home, whether it enters the home through a flood through the front door or whether it enters through some sort of sewer or water backup that's happening throughout the neighborhood. Can be two different things. But for the most part, though, all of us have, if we own a home, you're having homeowners insurance. And again, make sure you are very careful about what kind of water damage that you are covered for as well, because the fire, that stuff is pretty normal. We're pretty much covered for that. But the water is the one that can devastate you pretty quickly. Renter's insurance, I do highly recommend that. It is dirt cheap, dollars, usually only a few dollars a month, and it covers all your stuff in your apartment. So, you got some computers, maybe you got your Xbox. I'm going back to my single days when I had my 3 computers and my Nintendo and all my various electronics in my home and my brand new furniture that I bought. Um, that for only a couple extra dollars, I was able to cover that should there be a fire in my apartment. And of course, I would never thought I would be the one to start the fire. It's always the idiot neighbor who's lighting candles all the time that's going to burn down the place. So it's never you, it's always somebody else, right? But yeah, for a few extra dollars. And I will say that for those of you that are renters, of course, you're already going to have the auto insurance in most cases because you have a car and it's state mandated. Um, there was my insurance company for my auto for like a couple of extra dollars because I had the auto insurance policy. They were able to give me renter's insurance. So you may want to contact your insurance agent that has your auto and see if that add-on for renters is what the price of that is. It could be extremely economical and offer you a tremendous peace of mind should something happen to your belongings within your apartment. And then the last one I'll talk about is health insurance. So this is again a quasi mandated insurance now at this point with the Affordable Care Act or Obamacare. If you go without it, there are various penalties that are hitting you. But uh, this is one of those must-haves. Um, the uh, the potential of the financial devastation that could happen to you long term, if even if you were a single individual with no dependents, the uh, the impact of a major illness could wipe you out for a decade or more. And even this, let's say you're like, I don't care. I don't want health insurance. I don't care what happens to me. Well, chances are there are probably people around you that do. Maybe it's a parent, grandparent, loved one, family member who might feel that obligation to help you. So even though you have foregone the insurance, they may be one eventually. Let's say if you were in a devastating illness and you couldn't even speak for yourself, that they would be taking on that financial liability or trying to manage that financial liability. So I would say for your own financial protection of your future going forward, and for those around you who may want to come to your aid, having health insurance is just a great thing. Again, many of us get it through our employers. So again, that's where I would look for first for your health insurance. If the employer doesn't offer, and we've talked about it in the readings, there is the health insurance exchange. Again, there's only certain windows that are open that you can go to the exchange and buy, and sometimes your choices may be limited. But you could always look at the exchange as well. I did find back, when the Affordable Care Act first came out and the exchanges were out, I went to them just to price them. And it was interesting. I mean, to see the different rates for the different levels, the gold and the bronze and all of that. But it was also a good eye opener too. For a family of four, and I think I was looking at the gold package. It was well over 1,000 a month. So one of the benefits I'm very grateful for with my employer is even though I am spending a few hundred a month on health insurance, probably more around maybe 500 a month, it is well worth it. And in my own case, had we not had insurance, we would have had uh, the financial impact would have been in the hundreds and hundreds and hundreds, multiple hundreds of thousands of dollars to us. With one major family illness, it could, change the whole landscape of your financial picture, and then that can cascade into so many different areas. From what you're able to do for your dependents, your children, the incredible family stress it can put on a marriage by not having, uh, I guess a fundamental life insurance in there. It can be pretty devastating. So health insurance, that's a must have. So get that one. So just to summarize, life insurance, maybe, maybe not. Depends on your situation, especially if you have dependents. Then you probably want to get life insurance. Disability, get it. Get it through your employer. At least get the basic in there because that will devastate you as well if you don't have it, because you have to protect that income through that disability. Think both short-term and long-term. If you have a long-term disability that prevents you from working for the rest of your life, are you going to be covered? Auto, got to have it, required by law. Whether you just do the comprehensive or just go with the collision really depends on the nature of your vehicle. Home insurance, got to have it if you own a home. That's just part of the deal. And take a look at, especially look at the water damage and or flood, how that's covered through your homeowner's insurance policy. Renter's insurance, I recommend it. Costs maybe one espresso over at Starbucks, maybe two espressos at Starbucks a month, and you can have all of your junk, all your stuff covered within your apartment. In addition, you have some other liability, umbrella liability stuff out there with the renters that's kind of included too. If your dog bites somebody, that kind of thing. And then health insurance, got to have it. Probably getting it through work. But again, not having it and risking it because you think you're young and nothing's going to happen. Well, you know, one really bad motorcycle accident and you're going to be devastated, and you might drag some other people down in the process. People that care about you that may feel obligated to come to your aid if you didn't have health insurance. So, as being a parent, you kind of know that that's what you would do for your kids. But gosh, I hope my kids have health insurance when they grow up. So there you go. There's my kind of discussion on insurance. Hopefully, you found this section important. Insurance is not very exciting because you pay for it and you don't see anything grow. You know, typically it's not like investments where you can see your retirement plans grow, or having an emergency savings account and seeing those numbers every month, knowing, you know, I've got my savings account, my emergency funds all set. It's not like a budget where you can kind of see how the budget works. The only thing with insurance is you see that you're paying premiums, you know, and you don't. It's not very fun. Um, I guess the thing about insurance is truly, and the insurance companies really talk about this, but it's that peace of mind, knowing that if the unforeseen happens, these things are going to be covered. Your family is going to be protected. All right, so hopefully you've enjoyed the last two modules on insurance. So thanks for watching.